Hey everybody, welcome to another Midas Letter Daily. Today is Thursday, June 3rd, and I'm James West. I shall be your pilot today. This week, in terms of guests, I have two excellent stories here. The first guest is Miles Rideout. He's the Vice President of Exploration for Argentina Lithium and Energy Corp. He's a returning guest. Our next guest is Mark Perlman. Now, Mark Perlman is famous for bringing Walmart to Canada, among many other things. He is now the Chief Operating Officer of International Zeolite Corp. Zeolite is a substance that can replace perlite and vermiculite in the agricultural context. It retains water and allows for better water efficiency, but it also the zeolite product from International Zeolite is actually impregnated with fertilizer, so it actually increases the performance and speeds up yield times for crops like lettuce, as Mr. Perlman will let you know in this interview. Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. If you're interested in getting monthly actionable investment ideas in the cannabis space to your inbox, subscribe to the newsletter at midasletter.com. Now, let's jump to some of the audience questions, which have become somewhat of the highlight of this show. You know, I really love answering the questions. So, Christopher Berry wants to know, is the latest round of sanctions, for example, the EU agreeing to pursue a partial ban on Russian oil, a big deal? Well, Chris, you know, I think that there are elements within the Russian oil complex that are finding ways to get around any sanctions. And so we know that Russian oil revenue is largely fueling the Russian effort. So are more sanctions really going to make that much of a difference to Russia? I kind of doubt it. Certainly the fact that OPEC and Russian-backed interests came out and said they would increase production into the market seems to suggest that the sanctions are not really having that much of an impact. Kirill wants to know, is investing in small caps more profitable than blue chip companies? Kirill, that falls firmly into the jurisdiction of sweeping generalization. You cannot say categorically that investing in small caps is more profitable than in blue chip companies, or vice versa. Each individual investment yields its own profit and or loss, and the categories just don't correlate in that way to lend themselves to that kind of generalization. In general, it is perceived that blue chip companies come with less downside risk because the chance that Procter & Gamble is going to go to zero is extremely unlikely, even in the worst economic circumstances. Whereas the chance that a small cap can go to zero in speculative industries like mining, technology, and biotech is always a present threat. And so there is a higher degree of risk associated with investing in juniors. That being said, you're also not going to see Procter & Gamble triple in price over the course of 1 year generally, whereas junior companies triple and sometimes go 10x the price within a given year, though they are very much the exception rather than the rule. So that is the phenomenon that might lead you to that kind of thinking, but that general correlation doesn't work. There's a lot more risk investing in juniors. Greenstock asks, is the Fed's balance sheet already priced into markets? And whereas the market is forward-looking, Greenstock, I would say in this case, no. The Fed has lost a lot of credibility with the market over the last decade because it doesn't often do what it says it's going to do. I'll draw your attention to the multiple instances back in 2014-15 where Ben Bernanke indicated that the Fed was going to taper and the market would throw a tantrum and the Fed would back up on that language and say, well, not quite. So the experience of the market is that while the Fed likes to broadcast these bold moves, those bold moves seldom materialize in as bold a fashion as the then governor of the federal bank might indicate. And so, whereas the Fed has said that, Jerome Powell specifically has said that we are going to be very aggressive in removing or dialing back the balance sheet and raising rates, we really haven't seen any solid indication that they are going to be any more aggressive than they have been, which is not at all. So I think that the market has adopted a wait and see attitude on that. And so no, there is no stimulus dialed into that, because if the inflation prices if inflation keeps running out of control, the Fed will likely dial back both interest rate raises as well as stimulus removal, and you might even see an increase in stimulus before the year gets too long in the tooth if markets demonstrate poor performance to the downside too much and the economy crashes. Top Hat asks, thoughts on the Bank of Canada expected to deliver a number jumbo rate hike? Well, Top Hat, I think the Bank of Canada is restricted to the range of what is possible based on what the Fed does. In fact, if you look at the policy statements of all of the central banks across the G7, they all tend to follow what the federal bank or the Fed does in the US. So what is the Bank of Canada going to do? Are they going to deliver another jumbo rate hike? Well, if the Fed does, then the Bank of Canada will. And it might happen a day or two before, because these central banks governors are always in communication well ahead of the policy announcements. So in many cases, you'll see the ECB or the Canadian central bank come out and make an announcement ahead of the Fed's specific announcement, just to improve the appearance of not following the Fed. But that is exactly what is happening. The Fed decides what the whole world is going to do. So I don't really see another jumbo rate hike, because we saw inflationary numbers come back a bit after the Fed did raise by 0.5%. So we'll wait and see on that. Can you break down Voxtur Analytics' recent financials? Well, I can do my best, Ronnie. Let's just pull that up, shall we? So here is the recent quarter. This is Q1 2022. So they had a revenue increase of 96% over the same quarter in Q1 2021. Gross profit of $13.9 million was a 93% profit over the same quarter in 2021. However, the adjusted EBITDA was a loss of $3 million on $40 million versus a EBITDA win of $1.16 million on $15 million worth of revenue in 2021, the same 3-month period. Now, superficially, this looks like, oh, so the more money they make, the more money they're going to lose. That is not the case, because you have to consider all of the one-time charges and all of the inefficiencies that are still extant by virtue of the fact that Voxtur loaded in all these acquisitions in the 1-year time frame last year. So ultimately, the economies of scale that come with consolidating management teams and processes are yet to manifest in the Voxtur story. So while this number is disappointing in the immediate context, it's not actually bad news in the greater context, because there's more revenue coming out of the US. Revenue is growing, and the gross margin as a percentage of revenue is growing if you go in depth on those financials. So overall, I think this is really kind of good news. And then you take into the context the anticipated rollback that was disclosed in their last financials. So they're planning to roll back the stock up to 20 for 1. Well, that would call it 30 million shares in the marketplace. And a company that's doing 40 million, call it an implied run rate of 160 million per year, if they can get that adjusted EBITDA up and turn a profit, well, the ability of those numbers to affect the share price in the right direction with that few shares out goes way up compared to what it was. So take this in the context against the rollback that's anticipated, and this stock could become a very hot stock. For my part, I used to have 1 million options at $1.15 a share. Now we have 50,000 options, assuming the rollback completes at 2021, with a $23 strike price. So I think with the consolidation, we could see the stock start to trade in those ranges, especially as financial performance continues. Johnny Peter, are there any catalysts you're specifically waiting for that will affect stocks going forward? Well, Johnny, there are always the knowable catalysts, the predictable catalysts, if you will. In other words, we know that the Fed is going to continue to have meetings throughout the year and make announcements. Whether they're going to be more aggressive, hawkish, or dovish, accommodating, remains to be seen. Then there are the set of catalysts that are unknowns. Is the economy going to improve globally? Are we going into a global recession, as 40% of surveyed economists seems to indicate? Those are all unknown, but they're going to be known at some point. And then there are the unknowable catalysts. These are things like, and I'm going to give you an extreme example here, a meteorite crashing into the planet and causing widespread mayhem, or a major financial disaster of epic proportions like the contagion that eventually took down Lehman Brothers and constitutes what is now popularly referred to as a black swan event, even though there were plenty of us in the alternative financial media who were pointing out that this was going to happen. But I digress. So you always watch all of the things that are happening in the world and, try to stay out of the way of the big moves, unless, of course, you're in a position to predict them in the right direction at the right time. So any specific catalysts? I think if the war in the Ukraine was to come to some kind of an end, that would immediately boost the economic outlook for the entire world, and we would see that. And that would also possibly make the Fed's rate hikes more palatable to the market, and it might also make the stimulus withdrawal more palatable to the market. So that might amp up, which would then have the reverse effect. So all these things are pushing and pulling against the general direction of markets. I think that in 2022, the big spaces are precious metals as the alternative asset class to bonds. And I think that the battery metals, despite Goldman Sachs representations, I think they're building a long position and covering a short position with that statement in the news. And I'm expecting those to be the high-performing markets in 2022. How much time should I spend researching stocks before investing? And what's your main criteria, Aurora asks. Well, I would say, Aurora, that you should always be researching stocks that you are contemplating an investment in. I would suggest that you don't invest in any stock that you don't understand thoroughly all of the moving parts behind it, both in terms of fundamentals and technically. So how much time should you spend? You should spend as much time as you have. And that's a glib answer, but you can't spend any more time than you have to spend looking at stocks in the context of your job, your family life, your recreational, your sleep. So as much as possible. What is my main criteria? Well, I focus on investing in high-impact junior companies. I look for companies where the share price is, where the paid-in capital is at a satisfactory ratio to the number of shares outstanding, i.e., you don't want to see a company with 200 million shares out that were paid for with 2 cent that were paid for at 2 cents, and then with a whole bunch of warrants on it. I like companies with short, small, tight floats in thematic spaces like lithium and battery metals, and where management's interest is aligned with the shareholder by virtue of a fair paid-in capital ratio relative to what the share price is at. Wolf stocks. Are there any sectors you think are being ignored and have more upside potential than investors are currently giving it? Battery metals. I still think that we're in the early stage of a bull market, and now with Goldman Sachs broadcasting that the end of the battery metals bulls is here, I think they're about to be made to look wrong, except, of course, for the day they came out with that statement, a lot of companies took a hit. But you're going to see that short-lived. As I say, I think Goldman Sachs was short covering and probably going long battery metal stocks, and so they're using that market manipulation to improve that position. But you're going to see there's just no way that the demand for lithium is going to be satisfied by the emerging supply for lithium, anytime soon. So there is no doubt that the prices are going to continue to rise. If they come up with ways to use less nickel, less cobalt, then the prices of those may deteriorate over time. But in general, the battery metal space, in my opinion, is still highly undervalued. If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. Well, after several strong sessions to the upside, major indices seem to be resuming a bit of a downward trend, with each of the Dow, NASDAQ, and S&P losing ground today, albeit slightly. The U.S. 10-year is rising steadily toward the 3% mark again, which is not good news for the housing industry or for commodities associated with housing at all. Gold is still range bound in the 1800s here, as anticipated weakness in the capital markets continues to drive more interest in U.S. bonds. The Wall Street Journal announced today that they were going to see OPEC and a Russian-led group agree to increase oil production, and this despite the moratorium, or the embargo on Russian oil purchases in Europe that is happening. And if we take a look at the price of oil and gas, you can see that the market doesn't quite believe that this OPEC announcement is going to have a ameliorative effect on the rising cost of oil and gas. As we saw here, gas above 120. Goldman Sachs out this week suggesting that the price of oil could rise to $150. And Goldman Sachs is historically a very manipulative force in the market. If I draw your attention to an article that I wrote, A History of Manipulation, if you see, I've got 3 links in here. The first one is from April 10, 2013, and the Wall Street Journal published an article with the headline, Goldman Sachs says short gold, with an exclamation point. And if you look at the price chart of gold after that, so look at that. Gold is trading up here at 1577, the day that Goldman Sachs is quoted in the Wall Street Journal. The next day, it loses $200 an ounce. So that was 2010. Going back to the article, so back in May 24, 2011, Goldman Sachs says oil, this is Goldman Sachs quoted again in the Wall Street Journal, oil would hit $140 a barrel next year, they say. And what happens? Anyways, so my point is that Goldman Sachs, when they come out and say something, it's usually to serve an interest of theirs, either long or short. And there's the sort of the proof of that. They came out and said that the battery metals bull market was over for now, and I find that odd, considering then the next day they came out and said, here's our top picks for electric vehicles. You can't have electric vehicles without battery metals, so which is it? Is it a bull market or a bear market? They're not unrelated. So point is, Goldman Sachs, if they're saying something in the press, the bottom line is they're trying to manipulate investor behavior one way or the other to serve their interest, and so you have to be cognizant of that. It still moves the market, but it's going to rebound to what the fundamentals want it to be, because that's what's really driving the price. Looking at the oil price today, it doesn't look like the market believes that the Russian and OPEC pledge to increase production is going to have an effect on the market price of crude oil. That's what we're seeing there. In other news, Joe Biden is apparently heading to Saudi Arabia in a blatant defecation on human rights after Mohammed bin Salman, the murderous dictator of Saudi Arabia, who was behind the death of Jamal Khashoggi in 2018 as he sought documentation to get married. So Joe Biden has decided to throw that under the bus, and in exchange for increased Saudi Arabian oil production and a pass, I guess, on that blatant homicide, which was proven, and everybody knows that it was MSB who did it. So great for oil prices, but embarrassing to humanity. And finally, cryptocurrencies are sort of made a little bit of a rally earlier this week, back up to over 30,000, 31,000 for Bitcoin, but now struggling below 29,000 again. I guess you call that the dead cat bounce, the fart in the wind, whatever you want to call it. But the jury very much out on cryptocurrencies. Let's talk a bit about the price of gold here. Now, gold, as cryptocurrencies demonstrate to lack the offsetting inflationary pressures that an investment in gold does, I think you're going to see more interest move into gold. And so I have an expectation that the price of gold is going to start to well outperform cryptocurrencies, and already acts in opposition. It is negatively correlated to cryptocurrencies, which are more closely correlated to the broad market indices. And this is good for gold investors because in terms of purchasing power, if gold maintains its price here while the US dollar purchasing power deteriorates, that is gold doing its thing. And there are numerous fantastic gold juniors out there. Tembo Gold is a recent sponsor of the Midas letter. Will be joining us soon. We have a bunch of content coming on that story. And the symbol is TEM under the TSX Venture. Now, they are a client of our media production enterprise, and so we will be disclosing that. At some point, I shall probably make an investment in the company and likely be on the receiving end of some kind of incentive option as a consultant to the company. So, full disclosure, I am conflicted with Tembo Gold. That does not mean that I don't think it's a great story, and we have videographers on the ground to shoot the drill program that starts next week, so stay tuned for that. This week, in terms of guests, I have two excellent stories here. The first guest is Miles Rideout. He's the Vice President of Exploration for Argentina Lithium and Energy Corp. He's a returning guest, this time returning as a sponsor of the show. Argentina Lithium has joined us as a sponsor. But anyways, here's the story on Argentina Lithium. My next guest is Miles Rideout. He's the Vice President of Exploration for Argentina Lithium and Energy Corp, trading on the TSX Venture under the symbol LIT, and in the United States under the symbol PNXLF. Miles, welcome back.
Thanks for having me back.
It's our pleasure. Now, Miles, give us an update on what happened since we last spoke to you about 2 months ago.
We've announced our geophysics results on the Rincon West property. So to refresh, Rincon West is our project on the west flank of the Rincon Salar. That salar came into the news in the last 5 months when Rio Tinto Mining purchased the Rincon mining concession in the central part of the salar with its large resource. And we have the west flank of that salar. We have completed our geophysics program, so that's comprehensive transient electromagnetic soundings across the property. And that has shown us that we have conductors at depth over 64% of the property, which appear to be concentrated brines. So this is exactly what we're looking for on the property. And just a refresher, that property is, I think, 2,370 hectares. So those results indicate that we have better than 1,500 hectares of brines at depth. We mobilized our drill last week. We're drilling now. Our initial drill program there will be 5 holes investigating the core of the conductive zone. And we'll be doing stratigraphic holes down to 400 meters depth, retrieving core for analysis for flow rates, porosity, recovery. And we'll be doing brine assays on all those holes. That program, so that's about 2,000 meters of drilling. That will take us about 4 months to complete. We'll be announcing results as we go, basically upon completion and assay of each hole. So you should see news from us on roughly a monthly basis going forward until September, approximately.
Right. So then what is the sort of geophysical sort of landscape look like on these as a result of this new data?
Well, we have the brine starting at about 50 meters depths, and they'll most of the property, they start between 50 and 100 meters depth on the property, and it depends on the surface topography. and they extend to about 300 to 400 meters depth in most cases. In portions of the project, we can't see the bottom of the brines. So that means that the brines are so thick and so conductive that geophysics couldn't see through them. So if you're looking at our news releases, and we've put those images on our news release, and you'll see areas where we're presenting a conductor strata, and the conductor strata stops without going into the lower resistor. That doesn't mean the brine stops. That means we didn't see through it. So that's a good sign. That means that the brines there could be 400 meters thickness or better. We'll be trying to investigate right to the bottom of the basin. Arbitrarily, I've kind of set target depth as 400 meters, but if we're in productive lithologies in brine at 400 meters depth, we'll push those holes down to, say, 500 meters and try and get to the bottom of the basin.
In terms of the time till production of lithium for Argentina Lithium, what does that sort of time horizon look like at this point?
For that property and for other properties, we are exploration stage. So the way we would do this would be, these are exploration holes we're putting down now. If this program is successful and we're getting good results, we're going to continue to drill out the resource, and we'll also need to put in at least one production well in an appropriate spot so we can pull brines for testing, and we can measure our recovery rates. And at that point, what we're likely to do is to look for a partner for the property. And partners these days might take the shape of a brine extraction technology company. And some of those guys are well financed and can provide financing towards a production project. There's also the battery manufacturers who are looking with interest at properties in Argentina. And there's also new players such as petroleum companies. And there's a variety of petroleum companies which are interested in getting into the lithium space and kind of using their drilling and basin experience in the lithium space and trying to get into this as well. So I think that there would be ample opportunities for partnering, and then we'd be going forward with our partner towards production, and that would take, I would imagine, say 5 years to 7 years time to get into production. And so what we're looking at for our own part is we'd be going servicing the demand for later on this decade. I expect lithium demand will boom, and boom even better than it's doing today. If you look at the worldwide situation for lithium, electric vehicles are still on the upswing in terms of acceptance and consumption. But the other thing that we're missing on a worldwide basis is battery storage for infrastructure projects. And that could be a massive consumer for lithium. And really, we don't even see that yet. The prices of lithium batteries are still coming down. And so I think that we're going to see really strong consumption of lithium going into the next decade. So our production would be, with a view to that kind of market, the big consumers at the end of this decade.
We hear about all of these limitations in South America on the permitting of water usage for solar evaporation. Is that a concern for you guys going forward?
I don't think so. What we're looking at is direct lithium extraction technologies. There's multiple benefits to those technologies. They make, in many respects, they make the processing of your lithium product easier and better. They're also more flexible in terms of the grades that you can use, and you can use the re-injection of the brines once you've extracted your the ions that you want from the brines. You can re-inject into your reservoir and sort of improve your extraction that way. So we don't expect to be a high consumer of water. We actually have water near our all our projects have access to water. And so I don't expect that to be a big hurdle for us. What we are looking for is improvement in terms of direct lithium extraction. This is a young technology that was in its fledgling stage, say 10 years ago, and it's improved by great strides since then. There are now commercial scale projects being constructed in Argentina. We'll be watching those projects, seeing how well they perform, and the news produced on those projects will be factored into our decisions, how we proceed with the project. But I don't expect that we will be a large consumer of water, and I think that when we require water, we'll be able to access it without problem.
Mm-hmm. And so what about the rest of the permitting environment in Argentina? Is it relatively mining friendly, or is there any resistance, any risk of government intervention?
Well, it depends which province you're in. There's certainly provinces which they've demonstrated they're sort of no-go provinces. And in some areas, this might become or has been a political football. In other places, it's more of a social phenomena, say. When we're talking about the northwest corner of Argentina, so the provinces of Jujuy, Salta, and Catamarca, these are strongly pro-mining provinces. So the provincial governments have demonstrated their support for mining. They're very much interested in looking at mining, working with their own infrastructure projects to develop the Altiplano, the high plain of western Argentina. And then the other part of the package is the federal government. And the federal government has signaled very strongly that they're interested in mining investment and mining production, and particularly on the lithium side. So I'm looking at all the indicators, and I think that they're very strongly in favor of lithium extraction in northwestern Argentina.
Is the company sufficiently capitalized to execute on all of its exploration ambitions?
We're ambitious people. But our current plans, we're fully financed to drill out the Rincon project, and we can certainly get going on our Antofalla North project, which is the next up on the pipeline. So, but I would expect, next year perhaps we'd probably move to another financing step, because we're ambitious. We have a lot of projects in the pipeline. I expect to add new projects. What we're doing is we're looking for high-grade potential. My preference is adjacent to existing resources. I think that would give us a very good condition to get our own high-grade resources. I also look for favorable infrastructure and good all-year access on the properties. So nothing too high elevation. And as I say, good access. I don't like to spend a lot of money on road building if I can spend the money on drilling. So all our projects fit those parameters. And the way we're doing our exploration, the geophysics that we do in front is not expensive. There are different kinds of geophysics which are much more expensive. I have a lot of experience with many kinds of geophysics, so I am a geophysicist. And the transient electromagnetic soundings that we're applying on our properties are fast, inexpensive. They provide direct targeting on concentrated brine aquifers, so we know what depth we'll be drilling, and in many cases, we'll be able to see the bottom of the aquifer. So that's how we proceed. So we can really get straight to our drill targets, know how to drill these targets, budget accordingly, get on to the best targets, and apply our money efficiently. So I don't expect that we waste much money in this application, and we're financed through to next year when we'll be drilling on the Antofalla North property.
All right, Miles, let's leave it there for now. We'll come back to you in due course here and get an update on the situation. Sounds like you're making great progress. We'll speak to you soon.
Thank you very much.
Thank you. Bye for now. So there's the chart on Argentina lithium, obviously consolidating for what looks like it could be a move higher, obviously suffering the negative slings and arrows of Goldman coming out and saying the battery metals market was now over for now, even though that's impossible, fundamentally speaking, of course. And so great story, great company, lots of assets, lots of diversification down in Argentina, and we expect to go down and visit them soon enough. Our next guest is Mark Perlman. Now, Mark Perlman is famous for bringing Walmart to Canada, among many other things. He is now the Chief Operating Officer of International Zeolite Corp. My next guest is Mark Perlman. He's the COO of International Zeolite Corp. Trades on the TSX Venture under the symbol IZ, and in the United States under the symbol IZCFF. Mark, welcome.
Thank you. Thank you for having me today.
You bet. Mark, let's start with an overview of what is zeolite.
Well, zeolite is a fascinating mineral we refer to as Earth's nanotechnology. It was formed from volcanic ash. It's a mineral that absorbs and is highly negatively charged. It's a natural mineral that has the ability to hold about 60% of its weight in water. It has a number of channels or sieves inside of it that allows it to absorb water, but at the same time, because it's negatively charged, it attracts positive materials like metals and other things of that nature. Fascinating mineral. And we mine this mineral. International Zeolite mines this mineral out of British Columbia. We have an active mine that we refer to as Bromley Creek, and we have another large mine that we're in exploration process called the Sun Group.
Mm-hmm. So is zeolite a replacement for perlite and vermiculite?
Absolutely, it certainly can be, and that's one of the focus areas that we are focused on right now is how can we go to market with zeolite by itself as a soil amendment, right? Or the proprietary product that we've developed, which is embedding nutrients directly into zeolite, and we refer to that product as Urea. So what we've done is we repositioned International Zeolite as a ag tech company, very much focused on agriculture, especially now with the prices of substrates and fertilizers going through the roof.
Does this product qualify as an organic amendment?
No. Well, so let me back up. By itself, it's organic. But once we embed, say, a soluble fertilizer into it and it absorbs that soluble fertilizer, whatever the soluble fertilizer is may determine whether it's organic or inorganic. But as a mineral by itself, as strictly as a soil amendment, absolutely it's organic.
I see. And so could you theoretically add organic minerals to the zeolite, and then it is an organic amendment?
Absolutely. As a matter of fact, some of the work that we're doing with a group of scientists at the University of Havana has basically taken sheep manure and determined to use that as an organic matter and embedded the sheep manure directly into the particle itself. And so there is ongoing work to try to get it to be an organic matter. But our focus is strictly on the inorganic at this point in time.
Sure. Okay, and then so what do the economics of this material look like? How common is it? How rare is it? What is the price of it? What is the cost to mine it?
So in short, it's actually economically very viable for agriculture. From a mining perspective, the mineral is an open pit product, and it costs us about $100 to $150 per ton to mine the product. Once we mine the product, we then mesh the product. And that brings the price up to anywhere to about $200 to $225 a ton, depending on our cost to do that and the application. It's not just for agriculture. As a salt replacement, it's an incredible material because the mineral itself, because of its nature, absorbs water and therefore sticks to the ice. It's also a water filtration product, right? It's an incredible product for water filtration. So it depends on the application, and that drives the cost of it. But economically very viable. The only challenge with it is it's a heavy material. So your cost is the cost of transportation more so than the cost to mine and to prepare the material.
And then so in terms of the economic cost to farmers, what is the value proposition for them specifically, besides obviously, the ability to impregnate it with nutrients? I mean, I guess the main focus is on water savings.
Well, so no, actually, it depends. So there's two different products here. So, zeolite by itself is an incredible product to amend soil. So what it does is it reduces erosion because it holds 60% of its weight in water, right? And so if you have a compact soil, what it does is it uncompacts that soil to begin with, but it also holds the water in it. So then now you have water retention if it's an outdoor field. When you embed nutrients directly into it, you're embedding only 10% of what you would normally use as your total fertilizer usage, right? And so your real savings is in fertilizer usage. And given where fertilizer costs have gone over the last 2 to 3 years, you're saving significant amount of money. More importantly, when you embed nutrients directly into the zeolite, what you're doing is you're significantly reducing your time to crop, because the roots of the plant effectively wrap itself around the particle and have an exchange and have this tremendous ability to grow faster and healthier. So there's increased cropping, there's significant reduction in fertilizer costs. So from a grower standpoint or from a farmer standpoint, there's a tremendous amount of benefit of this. Our focus is really in the nurseries and outdoor fields right now, but this has application across all grow types of products.
Wow. And then what about in terms of other supplies of zeolite internationally? Is it a competitive marketplace? Is there lots available?
So there are about 50 to 52 different types of zeolite. So what we need to do is focus on one type of zeolite that's used in the agriculture field. In that space, it's called the kleptonite zeolite. And from a competitive standpoint, there are other providers out in the US and there are other providers worldwide of this specific mineral. Our differentiators, we're a value solutions provider, so we're fully integrated. So whereas those other competitors are just providing supply, what we are doing is we're combining that supply with a group of scientists and a solution specific for a business segment or industry segment, whether that be in water filtration or ag tech or even home use. International Zeolite, for example, has its own retail division called EcoTraction. And in EcoTraction, we use zeolite to do salt replacement for your driveway and odor removement for pets. So we are fully integrated, and that makes us a significant value differentiator. And we've repositioned this company to be a solutions provider at this point in time.
Okay. So then from an investor's perspective, what are the catalysts that are going to drive the stock higher?
So at the end of the day, I'm old school. I believe what's going to drive the stock higher is fundamentals. So as we hire more salespeople and as we operationalize and buy inventory and onboard distributors for the agriculture standpoint, you're going to see significant revenue growth in the company. And I'm really old school in that way. I believe that the growth of a share is just based on fundamentally what's your revenues and what's your profit line. So we today as an organization have completely repositioned International Zeolite. We've onboarded some very senior talent from California that are experts in ag tech. We've onboarded probably the most senior person in mass retail, and we've onboarded a number of other people that are in communications. So we've repositioned the company for success. But as we go through this, we also need to hire more salespeople, for example, and create production facilities in order to bring the agricultural product to bear.
Sure. So fundamentally speaking, what is the prognosis financially for the company going out 12, 24, 36 months?
So let's start where we are now. We do drive revenue today. It's not a lot of revenue, but we are actively driving revenue both in our EcoTraction brands and for example, from the sales of wholesale products. We also have a royalty agreement with our mine operators, so we are driving revenue today. We are forecasting once we bring our new agricultural products to bear within 24 months, we'll be at about $8 million revenue and about a 4 to 6% profit on that $8 million. And then subsequently in 2024 and 2025, we're going to see a fairly hockey stick approach to it, because right now the cost to produce this product and the proprietary nature of this product will drive a significant demand from growers, because you can't even buy fertilizers, and it's a significant advantage over existing grow systems. And that's what we've done over the last year and a half. We have made sure that we've taken the time to test and validate this product globally, and both through independent research institutes. We believe we have a significantly important positive disruptor to agriculture.
Okay, so then when do you anticipate profitability?
We think we're going to be in profitability about 2024.
That's not so long.
Yeah. So,
great.
And again, the company has a very small burn rate today. We're burning at about 30K a month, right, which is sustainable. But we need to raise small enough tranches to operationalize the company, to build a production facility. And our business model is very unique. Our business model is similar to the Coca-Cola model. Basically, what we're going to do is we're going to license the production, or sublicense the production of the nutrient growth system out to distributors, and those distributors will pay back a royalty fee to us, right? And so we really aren't trying to drive significant capitalization. What we're trying to do is be a low-cost producer, but be able to sublicense the product out. We believe we'll be able to scale. So instead of us pretending that we're experts and know all the growers in the world, we want to use those distributors that are already working with growers. Think of the big providers out there, the Scotts of the world, the iHorts, and those type of companies that are already working with grow medias and with fertilizers.
Okay, great. Well then, Mark, we're going to leave it there for now. That's a great introduction to the company. We'll come back to you in due course and see how you're making out. Please do send me some samples, because I will test it on camera, and we'll have that conversation when the tests are done.
I would also encourage you to review the 1-minute video, because I think that really shows it perfectly. And I appreciate your time today, and thank you for taking the time to meet with me.
Thanks. Bye for now. So there you have it. Very low price stock, which some might consider an opportunity. And as he says, they have revenue now. They will be profitable, according to his representation, at some point in 2023. So not too long to wait there. Might make this a great buying opportunity for risk-tolerant investors. That is not a recommendation. I'm not qualified to give you recommendations, but that's an observation and is just my opinion. I have no conflict of interest with this company. Anyways, that's my show for today. I hope you enjoyed it. I hope I gave you some value. Please continue to write me, MidasLetter@MidasLetter.com, and I'll see you soon. Thanks for watching.